What's up, everyone? It's Scotty with MoneyVest. So in this video, we are going to be talking about the upcoming week, and it's not going to be as packed as before, obviously, but we do have Unemployment Friday because it's going to be the first Friday of the month of April, and we are going to get that report for non-farm payrolls from last week, and we are kind of winding down on the earnings season as well. So got lots to discuss, and as I said earlier, I am traveling right now, so I am visiting my friends in Manchester in the UK. So I'm here. I'll be in London for about a day. I'm going to be here in the UK for the next 4 to 5 days, kind of visiting my friends and also watching some really nice football. And of course, I'll be recording videos on the go. But I'll be back in Dubai by the end of the week, and of course next week I will be most likely traveling again. So there's some travel plans coming up, but I'll try to keep you guys updated as much as I can, not only on YouTube but also on Discord as well. So make sure that you do take advantage of that 16% annual discount that does expire tonight. So tonight's quite literally the last day to take advantage of that discount here on an annual basis. And of course, get access to all the members only benefits, including trade alerts and ideas and options alerts, as well as the members only private videos, newsletters, and of course, trading view charts and watch lists as well. So we'd love to have you on board. So first things first, earnings season. Again, we are pretty much coming to a close. Earnings season is going to start kicking back up towards the end of April here, but really there's not a lot of companies that are super interesting per se. I mean, Paychex is probably one of those companies that is perhaps going to, pique my interest a little bit because it is a software company and it is profitable. But other than that, Dave & Buster's maybe, and that is pretty much it, right? So we are winding down on the overall earnings season for the markets here over in the US. Now, when it comes to the economic calendar, so Monday, April 1st, which is April Fool's Day, we got the ISM manufacturing numbers. We've got the Atlanta Fed GDP numbers coming out at 2 p.m. Eastern for the first quarter, 2024. Construction spending, manufacturing employment, and global US manufacturing PMI, all that super important stuff. And then, of course, we got the very important JOLTS numbers that are also scheduled because it is an employment week at the end of the day. So Tuesday, April 2nd, we've got the JOLTS numbers that's going to tell us the job openings, factory orders, and we've also got a lot of members talking, including Mester, Mary Daly, and Williams, all of them talking, including Bowen, talking all the way from 10 a.m. to 1:30 p.m. Eastern on Tuesday, April 2nd. So a lot of FOMC members talking, and it is an employment week as well. This right here, we've got some OPEC meeting scheduled for Wednesday, April 3rd. ADP non-farm payrolls. Again, it is an employment week here. So we got the JOLTS numbers, the ADP numbers, and then the official non-farm payrolls. Then you got the S&P Global Services PMI, Composite PMI. Member Bowen is talking, ISM non-manufacturing PMI, and then of course crude oil inventories. And then more importantly, 12 p.m. Eastern on Wednesday, Federal Reserve Chairman Jerome Powell is talking once again. So that again is going to be a market moving event. The markets are more certainly going to be reacting to whatever Jay Powell says on that day and of course at that time, because as we already know that there is somewhat unanimity when it comes to rate cuts in 2024, but at the same time, if inflation stays higher for longer, we also know that Chair Powell and of course the FOMC is going to be reluctant in cutting interest rates, and they are going to start to kind of think about it in a different way, because right now the balance of risks is now coming down to some reasonable levels where they can now start thinking about the unemployment numbers as well, and that is only if inflation continues to come down. If inflation starts to reaccelerate, or if it pops back higher, if it doesn't come down fast enough, then of course Chairman Jerome Powell has been very blatantly clear that the Federal Reserve's main focus is controlling inflation and putting it back under 2%. If that does not happen, then of course we are going to be somewhat in trouble when it comes to repricing from the markets as well. Import-export prices on Thursday, initial jobless claims. We've got the Atlanta Fed GDP now numbers again, FOMC members talking, and we also got probably the Fed's balance sheet that comes out on Thursday, April 4th as well. And then finally, the more important Friday, April 5th, that's the first Friday of the month of April. We've got the non-farm payrolls expected at 205,000 jobs created in the month of February, actually in the month of March, and the unemployment rate. Right now, there's no consensus. Actually, there is 3.9% is going to be that consensus for the unemployment rate for the month of March, and average hourly earnings year-over-year increased 4.1% and month-over-month at 0.3% as well. Now, if you come over to JOLTS, we're looking at a number of 8.79 million, so slightly lower job openings. And again, we've been tracking the unemployment numbers for a very long time. So if you come over to unemployment spreadsheet, which I have again created on the channel, I've kind of shared this multiple times on the channel. Right now, JOLTS number is 8.86. Unemployed persons, which is how many people are unemployed unemployed of the participating population, 6.4 million, and right now this ratio is sitting at 1.37, which obviously has been coming down from highs of 2.5. So this number, the lower it gets, the more in sort of equilibrium the jobs market is. But of course, you don't want to see this number under 1, because under 1 means the unemployment report is going to start showing some serious weakness in the overall unemployment rate and basically the jobs market here in the US. So we need to see this number close to 1, but of course not below 1, because that is not a good functioning labor market, because now we've got more people that are unemployed compared to the job openings available out there. Jobless claims will start to kick back up here if, of course, we see that ratio come down to below 1, and that will simply mean that more and more people are filing for jobless claims, initial claims, and of course unemployment insurance in the US on a week-over-week basis as well. Now, if you come over to the market, so if you come over to the S&P 500, we're looking at, of course, all-time highs for both the S&P and the NASDAQ, trading at well over 5,200, 5,250 to be precise, and NASDAQ here, of course, trading well over 16,000, albeit at a resistance right now. So we're kind of inside this red rectangle for the markets. The negative divergence continues again, so we got to be careful here with a lot of indicators, short-term indicators showing for price momentum for us, for us to be a little bit more on the elevated side. So percentage of stocks in the S&P trading above their 20-day moving averages, back over 82% every time it's been inside this red rectangle. Of course, it's time for us to be cautious, considering that majority of the market is technically overbought on a short-term basis. S&P 500 stocks trading above their 200-day moving average, also at over 82%, meaning only 18% of the stocks are trading below their 200-day moving average, and most of them are trading above the again the 200 SMA, which is again quite an overbought, overextended condition in the market. So next resistance and target is going to be staying put at $94, $95 again. It's very, very hard, very rare for us to go up to that level. Before that, we see a pullback, and that's exactly what's happened in the past with volatility, of course, staying so low. And we talked about this over the weekend video as well, where this was a mind-blowing stat. The VIX is so dead, so low. The market drawdowns this year, max has been 1.7%, so less than 2%, and the market have just continued to drift higher and higher to new all-time highs. So that's really where we are with the overall market sentiment at the moment. Hope you all enjoyed this video and found it helpful. And the bottom line is, again, Jerome Powell's speech, earnings, starting to kind of wind down a little bit. And then again, we got the non-farm payrolls unemployment report, which is going to be super, super important. And not to mention the market technicals, which at the end of the day are really what matters, of course, from a momentum standpoint, because at some point we're going to see the markets eventually roll over. This momentum just cannot go on forever, and that's just a fact, right? I mean, for anybody who thinks that, oh, market's going higher and this is going to last forever, wake up. I mean, you really have to think twice, because this is how market cycles work. They go up, they go down, they go up, they go down, and that's exactly how it works. Of course, we could see a higher high and a higher low, so that pullback and a correction may not be more than 4%, 5%, could be a small dip. But the idea is that volatility is low, market's overextended, Fed's speaking next week, so we just got to be a little bit more cautious and more alert, especially when you also consider the valuations on a risk-adjusted basis also trading at a little bit of a premium. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining. As always, happy investing, and I'll see you all in the next video.